Nobody cares about your financial future the way that you do. The job doesn't care, the government doesn't care, and the market definitely doesn't care. Welcome back to the Heavy Return Show. I'm Flo. This is episode 2. If you missed the first episode, all you got to do is go to our YouTube at heavyreturns.com. For all my podcast folks, we got the recording on Apple Podcasts, iHeartRadio, and also Spotify. So wherever it is that you listen, the show is there. Tune in. Today we're going to cover a lot. First off, we're going to talk about the jobs report that comes out this Friday. We're going to talk about Trump's impact on several stocks. I'm going to teach you guys how to break down an earnings report, the 4 major earnings that I'm looking at this week, why you need to get a Roth account right now, and your questions from Discord. Let's get into it. All right, so first up, pre-workout, pre-market. Just like getting ready for the gym, we're getting ready for the market. There's a lot of things that we need to pay attention to this week. The same way we need a routine for the gym is the same way that we need a routine to get on these stocks. We're going to go ahead and focus on what's coming out this week so that I can prepare you guys. First up is going to be the jobs report. Most investors refer to this as the non-farm payrolls, or NFP. NFP tells us how many jobs are gained or lost in the U.S. economy. The reason why a lot of investors like to look at this metric is because inflation data comes directly from this. What the Fed likes to do is they like to either raise or cut rates depending on economic data. So we need to be aware of what's going on so we can anticipate what the Fed will do with interest rates. And if we have that knowledge, then we know how to act accordingly when it comes to the market. Right now, the Bloomberg consensus is 95,000 to 130,000 jobs that were added this past month. In the month of April, it says that there were 115 jobs that were added. If the amount of jobs increase, the Fed is going to say the economy is doing all right. Let's hold off on cutting rates for now instead of cutting at that particular time. It's actually a growth headwind, so it's not really good for stocks. But if the report comes back and says that, hey, less than 80,000 jobs were added, then the cuts are on the table. And if that happens, then stocks will be bullish because there's more opportunity there. We need to be aware of the 10-year yield because that'll tell us how Wall Street is actually going to react. Watch the number Friday morning at 7:30 Central. Right now, as y'all know it, Trump has the power to sway the markets with just a few tweets. Trump mentioned Dell. You guys know Dell. They make laptops and computers. Trump mentioned that stock and all of a sudden is up by 221%. And the free cash flow jumped from 1.8 billion to 8.5 billion in just 1 year. That is crazy numbers. So at that point, we all know what's likely to happen. If Trump mentions you and your free cash flow goes up, your stock is going to ride like crazy. There's another company that I want you guys to be aware of. It's called PLTR. It's called Palantir. Here's the same formula. Right now, Palantir has increased its free cash flow over every single quarter for the last couple of years. Not to mention, President Trump has went out of his way to mention Palantir in speech conferences and has also brought Palantir CEO in many meetings. Now, I'm not saying for sure that Palantir is going to go up, but what I am saying is Dell had the same exact criteria, and look what happened. You guys may want to pay attention to Palantir. Something else that actually intrigued me with Trump, he also mentioned a lot of drone stocks that actually went up on Friday. It's ONDS, AVAV, KTOS, AVEX, UMAC, RCAT, DPRO. You guys need to add those to your watch list. I dropped that in my Discord. It's very important that you guys pay attention to what this man says because whenever he talks, the markets follow. Go ahead and add those stocks to your watch list and just pay attention. It may be an opportunity for you. Also, I want to mention that Trump is posting drones on his Truth Social page. So, why wouldn't we look at these things? No matter your political stance on Trump, we all can agree that this man has the power to move markets. So just pay attention. That's all I'm saying. Most retail traders look at the jobs report and zero in on one number. Did they beat the top line and did they beat the bottom line? And then they only trade off those two numbers alone. But that's just the surface. Professionals look at more things such as the income statement, the balance sheet, the cash flow statement, and also earnings guidance. Today I'm going to walk you through what each one tells you, why it matters, and the metrics you guys should be looking at. Save this video. You may need to come back to it every time a company reports earnings. First up is the income statement. Now I like to get this information from Yahoo Finance. All you guys have to do is Google Yahoo Finance. Once you get to that website, you type in any ticker symbol of the company that you want to evaluate. And then after that, you click on financials and all of this information will pop up. So income statement shows us how much the company makes and keeps. And then the headline number is the actual headline. These are the numbers that you'll see CNBC put up right after earning reports drop. This will be the headline, so you guys need to be aware of how to interpret this number. Now, the income statement will show you how much the company makes and also keeps. You'll hear CNBC refer to what's called the top line, or actually how much they sold. After that, you'll hear about operating income, which is actually the profit from the actual business before our financial engineering. Then you'll hear about the free cash flow, or the real money that's left after the company pays for everything to keep it growing. So revenue is the headline, operating income is the engine, and free cash flow is the proof. You can't look at these numbers in a vacuum. You want to compare them to their previous earnings reports. You have to look at previous earnings reports because that'll tell you whether or not the revenue is growing for the company. Every number that comes out needs its own context. You compare them to at least 3 to 4 prior earnings reports, and then that'll tell you whether or not the business is getting healthier. All right, so next up is the balance sheet. It shows us everything that the company owns versus what it owes. All right, so we have total assets, everything that they own, cash, receivables, their factories, and even their intellectual property. After that, you'll see total debt, which is what they owe. You actually want to see is debt increasing or decreasing. So it's important to be aware of that. And then also their net cash position, their cash minus debt. The strongest companies always have more cash than debt. This is how they survive, and this is how they even do buybacks or issue dividends. Okay, so next up is the cash flow statement. This is how we see whether or not the numbers are actually real. What it does is shows us how much the actual cash the business actually generates. Most retail traders actually skip it, but you shouldn't. What we want to look at on the cash flow statement is operating cash flow. This is cash from the actual business before investing or financing. This is the pulse of the company. Next up is the free cash flow. The number is right at the bottom. It's arguably the most important metric. Free cash flow is the operating cash flow minus capital expenditures, the money that funds dividends and buybacks. You may want to tune in to free cash flow and see whether or not that is growing or decreasing over time. Then you want to pay attention to capital expenditures, or what's called CapEx, to see what they spend to keep the business running. Now, the reason why free cash flow is so important is because a lot of companies like to do what's called financial engineering. That means playing with the numbers to make it seem like things are actually better than they are. But the free cash flow, the way that that's calculated, is very, very hard to fake the real. So if you pay attention to free cash flow, then these companies really can't put anything past you. So now we have guidance. Guidance is management's forecast for what comes next. You guys want to pay attention to this. For instance, did they make promises the last earnings report that they couldn't deliver on? Are they projecting that the company is going to grow? We have to pay attention to what they're saying so that we can make an informed decision. Ignore the headline and see what the CEO is telling you. Is the business getting better, or is it getting worse, or are they just maintaining? You guys need to know that before you put your hard-earned money into these companies. This is the earnings breakdown. Every single week, I drop at least 4 companies that I'm paying attention to that release earnings for that particular week. This week, we had Lululemon, Dollar General, Broadcom, and CrowdStrike. For this particular episode, I'm going to focus on Broadcom, but if you guys want to see the breakdowns for those 4 companies that I just named, just click the link in the description and it'll take you to that video. Broadcom, their ticker symbol is AVGO. Broadcom is a global tech company that makes semiconductors and AI infrastructure software. You need these things for data centers and also AI in general. Some of their biggest customers include Google, Meta, Amazon, and also Microsoft. These companies actually rely on Broadcom's AI chips, but they also compete with fierce competitors like AMD and Nvidia. Because this company produces highly customizable AI chips, it's very hard for these companies to switch away from them. So therein lies their moat. It would be very costly for one of these major companies to switch from Broadcom to go to AMD or to Nvidia for these customizable chips. So for now, they're protected. In the future, who knows? They report earnings Wednesday after the close. All right, so first up is the income statement for Broadcom. Right now, they have a share price of almost $450, and year to date, they're up 28%. That is huge. Again, they drop earnings on Wednesday after the market closed. Now, we're going to look at the revenue that they brought in. 4 quarters ago, they brought in $15 billion in revenue. And now for this last report, that jumped up to $19 in revenue, by about $4 billion in a matter of less than a year. That is amazing. Jumping over the cost at that particular time was nearly $5 billion, and now it's at about $6 billion. So despite them getting an additional $4 billion, the cost only went up by $1 billion. They're still a healthy company. Their operating income has jumped from about $6 billion back last year all the way to close to $9 billion on this last report. And finally, their net income has jumped from about $5 billion all the way to $7.35 billion. All of their numbers on the income statement is actually increasing. So this is what we want to see when we're dissecting these companies. Their top line revenue is growing over time, and also is their net income, which is a very good thing. So looking at their revenue, their operating income, and also their net income, these numbers have grown from report to report. This is what we want to see before we put our money into these companies. Broadcom is actually showing elite strength. Jumping over to the balance sheet, as I said before, the balance sheet is what you own versus what you owe. So the first quarter of last year, they had nearly $10 billion in cash. And for Q4 of last year, that actually grew to $14 billion. Again, that's a $4 billion in cash increase. Their debt has actually went down, which is a great sign. So it's $67.2 billion for Q1 of last year, and then for Q4 it's now $66 billion. So they paid off about $1 billion in debt. Jumping over to shareholders' equity, which is the most important for us as shareholders, they have grown from 70 billion all the way to 80 billion. That's 69.5 all the way to 79.8. So basically 70 billion to 80 billion. That's about a $10 billion increase in shareholders' equity. This is the things that we want to see, y'all. Finally, their total assets have increased from 165 billion all the way to 170 billion. Broadcom is showing us the numbers that we really want to see on the financial statement. This is a very strong balance sheet. Let's jump into the cash flow statement. So for 2025, their operating cash flow was 6.5 billion, and that has increased to 8.26 billion. Capital expenditures is very, very minimal. That only went from 140 million to 250 million. That is a drop in the bucket considering the amount of cash that they have brought in. This is our most important number, free cash flow, FCF. You'll see for Q1 of 2025, they brought in for that particular quarter $6.4 billion. Now, skipping to Q4 for 2025, that number actually increased to $8 billion. So that's an additional $1.5 billion that they brought in that particular quarter. So now we're on the buybacks. Now, Broadcom has taken care of its shareholders. It spent $4 billion in buybacks, and they later increased that for Q4 to $8 billion in buybacks. So now we're looking at buybacks. Buybacks is how companies actually return value to their shareholders. Now, for Q1 of 2025, they spent $4 billion in purchasing back their shares, increasing the value for their shareholders for that particular quarter. Skip it down to Q4 of 2025, they nearly doubled that amount, which is $8 billion. That is an amazing growth. So as an investor, we were taken care of with Broadcom. Despite them spending all that money, their ending cash was 9.5 for the end of Q1 of 2025. And then for Q4, it's at 14 billion. Y'all, Broadcom obviously has a very strong income statement, balance sheet, and also a cash flow statement. We want to pay attention. They land new contracts. Are they still maintaining a healthy relationship with their current customers? Are there any new products that they're developing? Or if we can hear them say that they expect growth for the next earnings report, then I do believe that this stock is going to go crazy. Y'all tune in Wednesday after the close. Whenever earnings comes out, that's how we check in with the company. That's their report card. How are they doing? Are they growing or are they dying? With this information, that provides two opportunities, one for leaps and then one for investment. That's why I pay so much attention to these particular things. If you're in my trading community, you'll hear me talk about earnings all the time. Why is this so important? Earnings is our opportunity to check in with these companies to see how they're doing. Are they growing or are they dying? Or are they just maintaining? When these earnings reports come out, Wall Street will actually react on the basis of that news. Stock price will either shoot up, it may even shoot down. Sometimes it stays the same. Either way, if you guys pay attention here, I'll teach you how to take advantage of these opportunities. For instance, last week I talked about Salesforce. I gave you guys the breakdown on Salesforce before they reported earnings. They had increasing revenues, increasing cash flow, and then decreasing debt. And then their guidance went well because their CEO talked about Agentforce. So if you guys know what to watch out for, you know how to take advantage of it. Which brings us to our next segment, which is Inside the Rep. So with Inside the Rep, this is actually an opportunity for me to show you guys how I trade. For this particular week, we're going to focus on Salesforce because I broke down the earnings last week before the stock shot up, and I just want to recap. So for Salesforce last week, I told you guys how I expected for revenues to increase and free cash flow to increase. Well, they did just that. So Salesforce actually did better on their income statement, their balance sheet, and also their free cash flow statement. And then their CEO said that he expected growth for the continuing months. You would have thought that the stock would have shot up that very next day, but it didn't. It actually went down by a couple of bucks. Now I'm thinking to myself like, all right, so Salesforce increased all their numbers, raised guidance, and then Wall Street overreacted and then the stock went down. I jumped all over it. I purchased 18 call contracts, which is the belief that price was going to go up in value. And I believe that my strike price was at 175 when I purchased it. So before they announced, Salesforce was at about $180 a share. And then the very next day, I believe that it dropped to about 173. So I bought the 175 call, which is not in the money, but it's very close. I thought that it was opportunity because their numbers went well and they raised guidance. So I was all over it. Either way, I put about $45,000 into it, which got me 18 contracts. Each contract was $2,500. Man, when I tell y'all, the moment I got in, I was down $735. But I believe in my system, so I didn't panic. I just stayed in. That was on Thursday, the day after they reported earnings. Well, Friday, everybody came to their senses and the stock price jumped up to $194. So remember, y'all, I had the strike price of $175 and then it jumped up nearly $20 per share. Those contracts that I had jumped up to almost $3,300. So again, it went from $2,500 to $3,300 for every contract. I had 18 of them. With that, I made $13,000 in profit in a matter of 2 days. I'm still holding on to them. I'm waiting to see how next week goes. June is historically not really a good month, so I may exit the position. But either way, this is good money. So you got to pay less attention to the headlines and pay attention to the numbers and the guidance. If I was listening to what the headlines would have said, I would have missed out on that great opportunity. But I'm glad that I know how to read these financial statements. If you want to learn how to break down companies the way that I do, all you have to do is subscribe to this channel and join our Discord, and I got you. This next segment is called the meal plan. This segment is where we focus on simple actions that may increase the likelihood of you becoming a millionaire over a long period of time. Before I go into this is for educational purposes only. I'm simply showing you some of the tools that you can use to build wealth. Today's topic is one of the most powerful accounts that you can own, the Roth IRA. And the crazy thing is most people either don't use it or don't understand how it works. That's why I'm here. The Roth IRA is simply an investment account that allows your money to grow tax-free. Let me say that again, not tax-deferred, tax-free. Meaning if you follow the rules, you can withdraw that money in your retirement without paying any taxes. So the first thing that we need to talk about is the contribution limits. For those of us who are less than 50 years old, we can only put in $7,000 a year. If you're over 50, you could do what's called a catch-up contribution and add an additional $1,000 per year. All right, so $7,000 a year, if you divide that by 52 weeks, it would take about $135 for you to get your full $7,000 over the full year, and that's how you will become fully funded. I don't know everybody's living situation, but if you could find it in your budget to just set aside $135 to max out your Roth account, that money will grow heavily. For our people with high incomes who think they're unable to contribute to a Roth IRA, well, there's a loophole. What you can do is what's called a backdoor Roth. All you have to do is open a traditional IRA and have your Roth IRA. You want to contribute to the traditional first and then roll that $7,000 over to the Roth, and voila. If you do your research, you'll find out that backdoor Roths are completely legal. You guys need to take advantage of it no matter what your income level is. Speaking for myself, I maximize my Roth IRA first and then I tap into my other investments. So let's dive off into the numbers. So you put your $7,000 in, now what? Well, you're going to get interest depending on whatever it is that you invest in. This visual focuses on a 10% growth rate. If you're putting in your $7,000 every single year for 20 years, you're going to have $400,000 in that account if the growth rate is 10%. After 30 years, that'll jump up to 1.2. And then after 40 years, that is 3.1. To some people, they'll jump all over 10% because their money is in a bank account and they're making less than 1% while the bank is actually taking this money and leveraging it elsewhere. Right now, my Roth is in two things. It's in VOO and it's in QQQ. For the past 10 years, VOO has returned an average rate of about 15%. And then QQQ has returned an average rate of about 20%. Let's take those two averages and say that my Roth account is returning 17.5% for the last 10 years. Smack dab in the middle of 15% and 20%. So if that's the case and my portfolio is returning 17.5% every single year and I'm maximizing it, it is at year 20 that I'll be at $967,000. That's nearly my million. That's why we have the meal plan. Something as simple as the Roth account, just putting in $135 a week, 20 years could get you a million. That is insane to think about, but that's why I'm here to let y'all know what tools are available out there that you could take advantage of. The meal plan. So it'll be things like the meal plan, and then there's other information that I like to put in my Discord. I keep bringing it up because I want you guys to join. On this show, I like to address the things that my community brings up, which brings our next segment. It's called Spot Me. We're going to take 2 questions from my community and dive in. So with Spot Me, my community is able to ask me anything, and then I like to address it on the show because then who knows? They may have a question my viewers may have, and we get to address it at one time. So let's dive in. This first question is from Piva the Boss, a very active member in our community. He asks, why does Wall Street overreact? Is that a tactic or are they blowing smoke? Okay, so Flo says Wall Street needs liquidity to enter and exit the market. They run propaganda to shake retail out so that they could buy the dip. Then they hype it to exit while retail buys the top. You follow volume and then you know the fundamentals. We discussed the CRM trade in my community. Some people were wondering why the stock price went down despite showing strong earnings. I personally believe that sometimes Wall Street likes to manipulate the numbers to shake retail out. You have to understand that these hedge funds and institutions are highly sophisticated. If they could take control of retail's emotions, then they could get in and out as they please. If you're able to look through the fluff, then you know that these overreactions are simply just opportunities for us to get into these trades. I love when Wall Street overreacts because that's an opportunity for me to get in position to take advantage. So our next question is from Marche, and I'm paraphrasing this one, but she asks, how do you think about risk management as a day trader? My response is stop asking how often you're right and start asking how much you make when you are and how much you lose when you're wrong. Risk management is very, very key. Learning technicals and understanding the charts can actually be taught to you. But the thing that you have to earn is psychology. You got to understand the difference between fear and greed. You have to know how much money you're willing to lose before you even enter a trade. So focus less on winning every trade and focus more on cutting your losses early and letting your winners run. So for this next segment, this is the heavy hitter of the week. This is where I like to focus on valuable members in our community. I just want to shine a spotlight on somebody that is very, very important. A family member of mine that's the whole reason behind me starting this group. All right, so we have our heavy hitter of the week. We got Angel. That is my godmom. So I'm going to give you a little context. Now, me and Angel, we will bounce investment ideas off of each other for the last couple of years. And she would always say, you need to start a group. You need to start a group. And I'm like, yeah, okay. And she just stayed on me about it. So one day I got the courage to go ahead and start. So I have to thank Angel for me starting this group. It's because of her that I had the courage to step out and start educating the public on finance. So she's showing a leap that she took. She had just one contract, and I believe that it cost her $500. And that contract ended up turning into $2,300. Ain't that a heavy return? Her caption says, don't think I'm just over here puzzling and coloring. I'm still in my game learning from the best. Man, I appreciate that shout out, Angel. Thank you so much for pushing me. Thank you for believing in me. I'm going to continue to push and go and grow and try to make everybody better and build this community and educate the public and giving me the courage and accomplish what I believe God's purpose for my life is. Just know that I'm going to keep going. I'm going to keep striving. I'm going to keep teaching the public. And we ain't stopping. And I'm going to continue till the mission is complete. Thank you again. Here's the final set. We discussed a lot of things today, y'all. We talked about Trump's impact on the market. We discussed financial statements. We talked about Broadcom. I showed you guys a trade. We discussed Roth IRAs. We answered some questions from my community. And also we highlighted our heavy hitter of the week. Remember, nobody cares about your financial future the way that you do. Your job doesn't care. The government doesn't care. And the market definitely doesn't care. So that's your responsibility. You got to keep learning. Keep working, keep going at it. It's going to be hard sometimes. Most importantly, you got to show up every day and you got to invest into yourself. Remember, health plus wealth. That's one discipline, but two scoreboards. I'll see y'all next week. Analyze, execute, and profit. Peace.